Your little choices become habits that affect the bigger decisions you make in life. Elizabeth George, my friend, habits. Habits, you want good habits like charting the market each and every day, 10 to 15 minutes. That's all we ask. We see that stocks and bonds are down, gold and Bitcoin up. Let's jump into these charts. We will start where we always do with the S&P 500. Look at the slam down going on this week. Down 0.83%. Of course, it all started back on the 24th of February, and it appears to be accelerating, doesn't it? I don't know if we're going to get as high as the volume of last week, but you can see how we have dropped lower. Look at this latest two-day candle, the Monday, Tuesday candle. Look at all the volume. It's less volume than the Thursday, Friday of last week, but it's a bigger drop. You can see here on the half day how, particularly for the last 2 days, the start of this week, Monday and Tuesday, things have been really moving down. Let me tell you where we are on our calculations from our trade execution summary grid. If you're not getting that, the reason you're not getting it is in the show notes every day that we email out to all our subscribers at chartingwealth.com. Doesn't cost you a thing to sign up. Nobody spams you. Nobody sells your list. Your name will not be given to others. It is ours. And what do? We send you 5 emails a week. That is for the 4 Market Pulse dailies and for the Market Compass weekly on Friday. And with that, you get our trade execution grid that has the numbers I'm about to go through. You don't have to worry about writing them down. Here we go. We are currently the directional probability on the short on the S&P 500 continuing for the next 5 days. We've got that calculated at 65%. We currently see a support. And I had one of our Patreon members this last week, Robert, ask me how we are calculating the resistance and the support levels, and we are making great use of the ATR there and also of our Heikin Ashi candlesticks on all 3 charts. And again, I urge you every day to compare how accurate that plays itself out. I think you will like it. What we see happening with the support right now, we're at 552.02 is where our support level is, and our resistance is at 580.09. Now that's quite a ways up from where we are right now. We close the day at 555.92. You can see after hours trading is around the 556 mark, up a little bit. But again, that's just after hours, is clearing orders and such. As we look at what's going on with the strict entry and the aggressive entry points, they are 555.59. That is about where we are now. And the strict is at 552.02. Expected moves right there around the $30 mark. This is, again, our 5-day forecast. Back check accuracy is 60% on the aggressive, 70% on the strict. So, again, we don't have a huge probability of the continued down movement, but we do have a nice, accurate back check. If you're already in, of course, you want to just keep letting that ride. You have no reason to pull at this point. And we'll just continue to update you on a daily basis as to where the probability of the continued direction is and how accurate the back test continues to prove itself. Yesterday, we were at 65% of a continued down move, and the back check accuracy was the same. So again, moving in the right direction with the right information. Let's move on to the Qs. Qs setting up very similar to the NASDAQ. We can see where it pounded its head a few times as it hit its top, starting back there in mid-December, down a little bit, popping up, and then starting to roll over like the S&P back on the week beginning the 24th of February. I am right there. That's what I recalled. And of course, as we've seen things move down, we're almost up to average on the weekly volume already. And we have 2 days to go. Now, again, we did have nice high volume the last 2 weeks. So if we get as higher, you can see on the 2-day as things have accelerated down, and you can see where things pounded down really strong on Monday and down again, not as much on Tuesday, 0.24%. Now, our trade execution summary is telling us we're still short at a 60% directional probability. We see our support level at 467. We're currently at 471.60. We see our resistance at 497. Aggressive entry point is right about where we are now. The strict entry point, of course, if you're not already in, is around the 467 mark. So we will continue to pay attention. Our back test accuracy, not as strong as the S&P, 55% on the aggressive, 65% on the strict. And again, we're back testing the triggers that again, and of course our resistance and support levels and our entry points on prior moves. And that's where we're getting that accuracy check for you. Now again, I'll remind you, we're not a stock calling service, not a bond or gold or Bitcoin calling service. We're an education firm. I want you to practice trade with us. Again, put the lessons you learn here to work and practice trade all you can. It doesn't cost you anything. When you start getting good, you've convinced yourself you know what you're doing. Of course, that's the time to, again, get into a small dollar trade, such as, look, one share on TLT is only 90 plus bucks, okay? If you lose 2% of that, it's less than $2. Use 20%, it's 18 bucks. So again, that's the way when you really want to start trading with real money, very small dollar amounts. Then what do you do there? You learn how to enter. You learn how to put in good till canceled sell orders. You learn how to use bid and ask, which is which. Again, just always remember, you pay the most when you're buying. You get the least when you're selling. You can just see it right here. 90.39, that's what you buy at. Of course, that's what you sell at. And bid and ask. You get confused on bid and ask. Just remember that the higher one's what you buy at, the lower one's what you sell at. It just makes sense. If you drove a car off the lot, are they going to give you more than you paid for it? No. That's the way that works. That's the liquidity. And again, when you're buying a stock or an ETF, that there's a huge spread, not a few cents like here, and you're jumping in, man, you need to really think. You really need to think about what you're doing because you're entering something that is illiquid. Let's go to TLT. It's down 0.71%. We have a 55% probability of continued directional movement over the next 5 days. We are currently at 90.40, and we see our support level at 90.14. We can see decent volume in here. We can see on the 2-day chart where it peaked. Where it peaked right there around the Friday, Monday, Tuesday, Wednesday, and then started moving over toward the end of last week. And we have a doji there right now, which means lots of indecision. You can see where things moved up through Tuesday of last week and then moved down and it's sort of popped around now. And we see where over the course of this day, they started moving down again. Haven't reached the high of last week. Red volume doesn't mean negative volume. It means we opened lower than the prior close. That's all that means. It's just telling you what the candle did. It's not telling you the volume is negative. That means more selling than buying. It's not telling you that at all. Now, when we continue to follow things out, our aggressive entry point, 90.38. We're currently at 90.40. Of course, aggressive entry point usually on a short is somewhere near where the, if indeed we do have it going short, is going to be probably more near where things are. And then the strict entry point is at 90.14, which is where the support is. So we're looking at maybe a $3.72, $4 down move. And again, the back test accuracy, not that high. 50% on the aggressive, 60% on the strict. That is where we are on bonds. 2 more to go. We look at gold. Now, gold was, again, it's sort of been bouncing a little bit around. And you can see, look at all the indecision. 3 weeks of 2 dojis the last 2 weeks. Will this week turn into a doji too? I don't know. It's a little green spinning top right now. We can see where we had 4 days of down movement, Wednesday, Thursday, Friday, Monday, 2 weeks ago. And then, of course, over the last Now, six market days, we saw it pop up for 4, and then a doji for the last 2. That is why we've been seeing in gold our probability of direction bounce around. Yesterday it was 50% short. Today it's 55% long. My friends, that is about the same thing. So again, I don't get excited when it's telling me a definite maybe, okay? Don't get excited about that. Support is at 268.15. Resistance is at 269.73. We're currently at 269.16. Aggressive entry point 268.95. The strict entry point 269.73. So that's not, because it's long. Okay, I was like, wait a minute, that's backwards. But we went from short to long at 55%. So it means very little to me there. Expected moves around $10. We do our back test accuracy check. 50% on the aggressive, 60% on the strict. Doesn't excite me at all about doing anything at this point in gold. You're literally throwing dice there, or maybe more like tossing a coin. What do we see going on with Bitcoin? Well, as we look at Bitcoin, it was the real climber for the day. Oh, by the way, gold was up 1.17%. What do we see going on with Bitcoin? It was up 4.82%. Now you can see we had a huge down day yesterday. It didn't recover anywhere near what it went down, as you can look at. We're still, as we look at price, we can see on both the 2-day and the half-day, we're well below that weekly trend line. We look at the volume, nothing to write home about on the weekly, nor on the 2-day, nor really on the half-day. Just not a lot that, again, by volume is driving that. That, of course, does what? It puts us about 50-50. Now, it's tending to the short side. When we look at going short, our accuracy back check is around 40% on the aggressive, 50% on the strict. That means I'm not doing anything. I will give you the grid. Support and resistance levels 2284 and 2363 respectively. Aggressive entry point 2336, strict entry point 2284. But again, it's nice that we see the S&P 500, NASDAQ 100 moving down. Now, those of you might say, well, Tom, what are we doing? You can't buy something when it goes down. Well, of course, one thing that we talk about quite often here, and I'll put it at the end of today's video for new folks, SH is the ProShares inverse. Look at that. It's the S&P 500 short. It's a single short. Again, they're positives and negatives to shorts. One thing it allows you to do is if you can track the market, well, hell, when it goes down, you can make money in your practice trades. You can see them go into the green. You also need to practice this, though, to make sure that you're not doing something to yourself that you don't fully understand. And the video I'll put at the end of today's video explains to you the shortcomings of inverse funds, how they recalculate on a daily basis. You can magnify your losses, how the fees are many times more than something like SPY or QQQ. But again, if it's going in the right direction, you know what you're doing and you can track it, it's probably something you want to maybe be a little familiar with. Here's another one. This is PSQ. It's the single short for the NASDAQ 100. Here's a short for Bitcoin. Wow, BITI. Look at it. It's been going up. I did a trade with you guys, I think all the way back here. I did this trade, I believe, last year. It was about mid-year. Yes, around July. That was a beautiful trade for me. If I'm remembering the correct one, I jumped into BITI, and it treated me quite well. So again, there are options. You might say, Tom, what about gold? DGZ is the gold, and I don't like it. DGZ, maybe I can show you why. Yes, look at the spread here. It's only 7.